Hey guys, welcome back to Fundamentally Crypto, where I teach you how to navigate the cryptoverse. Today, we will be starting a new series called The Market Review, which I'll be releasing every Sunday evening. And the aim of this series is really to take an unbiased, logical, rational view of the market, looking at what we have in front of us, looking at the facts, and just looking at a couple of indicators to try and give us an edge, try and give us a slight advantage in figuring out where we are and how we can make good decisions from this point onward. So please like and subscribe if you enjoy this. Let's get right in. So starting with Bitcoin, we saw that it had the worst quarterly candle in its history. Secondly, it closed below the 200-week simple moving average for 2 consecutive weeks, which again is historical. Thirdly, we saw huge contagion spread amongst many different centralized finance lenders such as Celsius. We saw Voyager, we saw BlockFi, and I'm sure it's not the last we've heard of them or of centralized finance lenders. Fourthly, we've seen talks of how the market might chase down the Celsius liquidation price, which is currently sitting around $12,000. And then lastly, the question is this a good risk reward? Is it a good time in terms of risk reward to buy Bitcoin? So starting with the weekly performance of Bitcoin, we saw that it returned 9.98% as of the recording of this video, which is a couple of hours before close. Secondly, Ethereum performed slightly worse at 12.78% down for the week. We saw the total 2 return 8.33% and total 3 down 6.73%. So if you think about this, it's pretty interesting because we know that altcoins bleed against Ethereum and Ethereum bleeds against Bitcoin. But interestingly, this week we saw that total 3, which is the total crypto market cap minus Bitcoin minus Ethereum, actually outperformed Bitcoin, obviously, and Ethereum. And it's interesting to note because, we saw a lot of forced liquidations. And because of that, I've just been noticing how these forced liquidations don't necessarily result in the same level of sell-off in altcoins. And so that's partly why you see, a sort of an outperformance of the altcoins against Bitcoin and Ethereum over this past week. So it will be interesting to see if this correlation or, this outperformance of altcoins can actually last. I doubt it, but it's still interesting to watch, and it could be a signal at some point that this could be a good time to enter into altcoins if we just see way too many forced liquidations on BTC and ETH. So shout out to Will Clemente and his team for their market update. I'm going to be using quite a lot of their stuff to discuss the points that I wanted to touch on. But in this chart, you can see the market cap of Bitcoin and the market cap of Ethereum, right? And then this blue line shows the correlation of the market cap of Bitcoin and ETH against the crypto market cap, okay? Minus BTC ETH. So in this past week and, roughly past 2 weeks, you can see that the correlation between these two dropped quite a bit, okay? So you can see the correlation was close to 1 and then dropped to around 0.55, 0.5. And the reason for this is exactly what we said before, right? We see that Bitcoin and ETH had quite a lot of forced liquidations for a number of reasons, and as a result, altcoins didn't sell off as heavily, right? And that's why we saw the relative outperformance of altcoins against Bitcoin and Ethereum. And so this chart shows it really well. So shout out to the team. But again, it's an interesting relationship. We haven't really seen this before, at least to this extent. And so it's important to watch and just take note of, and we'll cover it again in next week's video. So in terms of the amount of Bitcoin that's currently sitting on exchanges, it's actually at all-time lows. So you can see over here on this red line, it's at all-time lows, which represents the net position of Bitcoin on all exchanges. And so this is also interesting because, it signals a few things, right? Deep in the bear market, people are obviously super risk off. But even more so, there's been quite a lot of FUD around exchanges. And, rightfully so. A lot of lower tier exchanges are actually, halting withdrawals and, because they're insolvent and stuff like that. So, advice is always take your coins off exchanges if you're not trading them. And, if you are trading them, if you're going to sit on a cash position for a while, rather just keep it, on a self-custody wallet. So, what this is telling us is, firstly, the whole exchange FUD, which isn't really FUD, like it is true, but at the same time, people are actually stacking and they're taking off of exchanges, sitting tight for the long run. So think about it in terms of that. Cool. So this chart is pretty interesting. So at the bottom you have USDT and USDC against the total crypto market cap. So that's essentially your main stable coins. So just think about it as how much money do people have in stable coins against total crypto market cap. And here at the top is the price of Bitcoin. Okay, and so what this chart is saying is that when the total amount of stable coins was, for example, really low, the market price of Bitcoin reached the local top. And then as the market price of Bitcoin came down, stable coins reached a local top, right? Same here, local top, same correlation, right? And so here, when stable coins reached a local bottom, it was a top signal on Bitcoin, right? Stable coins reached a local bottom, it was a top signal on Bitcoin. And so what this chart is sort of suggesting is that now that stable coins have reached sort of the top of this range, right? Meaning that there's a lot of money in stable coins waiting to buy this dip, right? So the question is, is this the top of the range? And will we see Bitcoin reach again like a local bottom, in this case, be it a macro bottom, and then head back up as people deploy stable coins again, and then this line will come down again. That's sort of the thinking behind it. So very interesting chart, just to hypothesize and say, maybe there is a correlation between these local bottoms within this range, to say that Bitcoin, it could be a signal to say, look, people are ready to deploy their stables, and they're sort of maybe either waiting for this final capitulation, or they might be deploying now already. Cool. And moving on to this chart, and this is the Bitcoin 4-year trend. And so what this chart is showing is that this blue line is the 4-year trend line for Bitcoin, and the gray line is obviously the Bitcoin price. So we're only touching and going below this 4-year trend line for the 4th time in its history. Okay, and historically, this was a very, very good time to buy Bitcoin, right? So if you look here, 1, 2, 3, 4, if you bought at any point, historically below this trend line, it was a really good buy. And if you held for the next, couple of years after that, you'd be in a good position. So statistically, it is a good time to buy. And remember, we're trying to be rational, we're trying to be logical here. And so based on what we've looked at so far, yes, it is a good time to buy, right? Could we go lower? Yes, we could. Could this be the bottom? Yes, it is. And so we're going to be looking, yes, it could be. Not yes, it is. We're still looking at a few more data points. But my point is here, like, how greedy do you want to be with your entry, right? Do you want to catch the bottom? Because if you know you won't, why are you trying to catch it? And if you have this thinking in your head that you know where the bottom is, you're most probably wrong. So it's almost like you just got to, admit that and realize that and say, look, historically, this is a good time to buy. And whether I dollar cost now or dollar cost a bit lower or a little bit higher, it's still a good time to buy. And so that's sort of the view that I'm taking based on what we've looked at so far. Cool. So moving on to Bitcoin dominance. So for the week, Bitcoin dominance went down 0.55%. And just a point on Bitcoin dominance, this is pretty much how it works. So firstly, you want to accumulate long-term hold positions when Bitcoin dominance is at a high time frame resistance. And secondly, you want to start scaling back into Bitcoin when the Bitcoin dominance is reaching long-term supports. So what do I mean by this? So if you look at this chart, Bitcoin dominance has actually been ranging recently, and not recently, but in the past couple of months. But most recently we saw quite a big drive in the Bitcoin dominance from 39% to around 40, 48, 49%. And this is typical of Bitcoin in a bear market, right? We see money flow out of alts, leaving those coins and flowing directly into Bitcoin and ETH. And so I still expect this to continue grinding higher as long as we continue grinding in this bear market. And so it was quite surprising to see the Bitcoin dominance drop quite a bit. Have quite a big pullback from 49 to 43%. But again, like I said earlier, with the forced liquidations, I think that had quite a big role to play in that. And this could be forming, almost like a higher low and heading back up. So just keep a watch on this. But again, based on the previous slide, remember you want to accumulate long-term alt positions when Bitcoin dominance is at a high time frame resistance. So for example, if you accumulated alt here, or in this case accumulated there, that that would have been just before the bull run like really kicked off. But that's the thinking, saying that Bitcoin dominance will push up, and then there'll come a point where it reaches a top, and it's at that point where money will flow out of Bitcoin into altcoins. And so that's the thinking behind this point one, where you want to accumulate it at points in this chart where it's at a high time frame resistance and where it's going to kick back and pull back, because historically that's when money will flow from Bitcoin directly into altcoins. Just a point on that, it doesn't mean it's flowing directly into altcoins. If Bitcoin dominance goes down, it can also just be going into stablecoins. So just a note on that. So moving on to the dollar index. So the dollar index went up 1% in this past week. And first point on this is that it's breaking out of a long-term range, reaching levels last seen since 2002. So that's 20 years ago. And secondly, the dollar strength coincides with risk-off sentiment. So what the dollar index is it's the strength of the dollar against a basket of other world currencies. Okay, so I'm no expert on this, but I have a basic understanding of how it works. And so essentially, as we went risk off, right, and as we knew the Fed was going to raise rates, and the whole Russia thing started at the start of this year, but that risk off sentiment meant that people shifted money, like finances and all of that straight into the dollar, right? And a point on this, if you guys remember, or part of the bull run, you remember how, everyone was shilling how bad the dollar is and like it's going to zero, which it will at some point. But, I think most people were wrong, right? I think we expected, we knew inflation was coming, but it's like we expected the dollar just to be just so trash. But unfortunately, people still flock to the dollar. And when the dollar strengthens and when it has these major pumps, it's pretty bad for risk on assets like Bitcoin, like ETH, and like the rest of crypto, and obviously equities as well. And so you'll see that in this chart. But what I want to show you is that it's breaking out of a long-term range. So if you look here, this is 2002, this is now, and this is like since I think it was 2015, 2014. And so it's been in this range, and now it's broken out. And so, a lot of people are saying this is going to continue until 108, 112 before even pulling back. So I'm not sure about that, but the point is that these downtrends, right, in the dollar index coincided with bull runs in crypto and in equities. So what you need to draw from this chart and keep track of is at some point, this will retrace. I don't know about how far, but it will retrace, and that could be a relief rally for risk on assets. And so just keep a watch of keep a watch of this chart and just keep monitoring that to see what is actually happening here, because the dollar is showing immense strength, and obviously that's on the back of other world currencies showing immense weakness, like the Japanese yen. I think is getting absolutely wrecked. But just keep track of this, and I think the main takeaway is as soon as we see a decent pullback in this, I'm sure we'll see a decent bounce in crypto, more so than we've seen so far. So again, I just want to reiterate that the bull run of 2020 and 2021 coincided with the DXY going down over that time period. And then secondly, use this as an indicator of when crypto could turn around or could experience a relief rally. So looking at the S&P 500, firstly, the S&P 500 had its worst half since 1970. So the worst 6 months since 1970. The 10-year, not UST yield, but US Treasury yield, right? UST is at basically zero, but we had that 8x pump from the lows recently. But anyways, again, 199 basis points to a high of 3.5%. And then thirdly, economic measures of inflation hit 40-year highs while the market measures are in free fall. And so just the point on this, right, the S&P 500 still hasn't reached its pre-COVID levels, right? So before COVID, and then it had its massive sell-off and the subsequent V-shaped recovery, we still haven't reached those levels. So, right, don't think that just because something has had its worst half since 1970, it doesn't mean it can't fall further. Right, that's an investor bias, and yes, it might be like, oh, this is such a good time to buy it, but in the same sense, we've come off astronomically high valuations just because of the free money printing, because the money printer just carried on throughout COVID. But, in light of that, I think that the most important thing and the most important point I want to make on the S&P 500 is that this next inflation print that we get, I think it's this month, that'll be quite pivotal as to what happens with the stock markets, because that'll either signal to us that maybe we've reached a local top on inflation. Otherwise, if we get a higher print, it's just going to be really, really bad. We know the Fed is going to continue raising rates, but if inflation continues to climb higher and set new highs, it's just not going to be good for crypto and not for equities either. So again, if we look at these stats, so the S&P had its worst first 6-month start since 1871. So the last time we had, starts this bad, it was 1932, 1877, 1962, and 1970. And so the S&P has performed really badly, negative 20.58% in the first 6 months. So if you now look at this chart, this is the second 6 month following the worst 6-month starts. So this was now the following 6 months after they had their worst 6 months, for the start of the year. So interestingly enough, we saw major rallies, right? So because we reached pretty deep lows, we saw subsequent rallies after that. And that's for many different reasons, but it's interesting, and you can take note of that and say, look, we have been overstretched in a certain sense, but again, it doesn't mean we can't go lower. But at the same time, history tells us, maybe we are in for a rally just based off this chart. And just the point on this, if we do get a higher inflation print, it's really hard for me to see, the S&P rallying 26, 25, 30% from here. If inflation just keeps spiraling out of control. If inflation tops and it does gradually come down throughout the year, I could definitely see positive returns from here onwards. But yeah, pretty difficult to see us bouncing, in excess of 20% from here. So this is just an interesting table to see, how the major benchmarks performed. And I just want to highlight, so the S&P had a negative 20% return, NASDAQ negative 29.2%, and then Bitcoin was down 58%, and the total crypto market cap was down 61.3%. So obviously pretty rough for risk on investors, but I think just take note of the correlation between stock markets and Bitcoin. Obviously, we've seen quite a strong correlation at the start of this year, and if that is likely to continue. But on top of that, it's been interesting because obviously Bitcoin trades throughout the weekend, to see it as a leading indicator for what's going to happen for risk on markets during the week. So I don't trade equities because it's not fun, and I don't feel like I know what's going on there as much as I do with crypto. But take note of how Bitcoin can lead the equity markets, especially over a weekend. and then see how it plays out through that week, taking note of how Bitcoin will perform in between the closes. Cool, guys. So lastly, just what you can actually look out for this coming week. So I said all of that to say more or less where we are at now is, right, a lot of people are talking about having one more wick down, right? Maybe chasing down Celsius, getting them liquidated around $12,000. There's just this expectation in the air of having one last capitulation week. I think we already have had capitulation to a certain degree, in that week when 3 Arrows Capital, when that news spread, which wasn't only news, it was real. But it doesn't, things aren't always as obvious as they seem. So if everyone is expecting one last capitulation where everyone's just going to go all in and buy their favorite altcoins, you got to ask yourself the question, is that realistic? And, just be wary of thinking like that and thinking, I'll catch it one more time when it drops. And that's why I always recommend dollar cost averaging. Obviously, this isn't financial advice. Secondly, scam pumps leading to lower highs. Because maybe your portfolio got absolutely wrecked the same way mine did, these scam pumps can actually, get you quite excited, right? You might think, okay, we finally hit the lows, and then we might pump 50, 60, 70% on altcoins. But ultimately, all of these are actually just leading to lower highs because the macro outlook is still really uncertain and really bad, and we don't have any decisive, information to go off. So you should rather just assume that pumps are just going to be sold off, and you're better off just stacking Bitcoin and Ethereum during these times. And then thirdly, be careful which altcoins you start to accumulate. This is more of an in-depth point, but ultimately, like, altcoins will continue bleeding against Ethereum and even more so against Bitcoin. And so on top of that, like, a lot of altcoins have really aggressive unlock schedules at the moment. And so if you don't do your research properly and you don't really understand what you're buying into, you'll probably get wrecked. So understand that, like, narratives aren't really here anymore, in like the same narratives that were there during the bull run. So really know what you're buying and why you're buying it. Otherwise, if we drop another 50%, are you just going to paper hand that altcoin, or are you just going to say, oh, whatever, I lost 50%? Whereas you can actually make a good decision and look at and plan what you want to buy, in the coming months if we continue going sideways and down. So lastly, prepare for the next inflation announcement. I think that's all that really matters. That's all that we're really waiting for. If inflation goes higher, I expect us to go lower in the markets, and really just prepare for that announcement. Keep watch of the news and see if there's any signs, indications of what the inflation print's going to look like. Cool, guys. So closing thoughts is a quote from Warren Buffett. And he said, if you won't buy the whole company, don't buy a single stock. But in our case, a single coin. And the reason for that is, like, if you're still speculating during the bear market, and I know, like, crypto is mostly speculation, but if you're still, like, just throwing money around, like, it's just a bad way. It's just rough. Like, you're going to lose all your cash. So rather do some fundamental analysis on a token and on a crypto coin before you actually buy it. Because if you just do a little bit of digging, read their documents, read their docs, and look at their website, Twitter, Telegram, spend a bit of time in the Discord, you can get a good idea of what's actually going on in this project. And remember, like, value your money. Don't just throw it away, and just take a more prudent approach to accumulating in this bear market, because it will pay off if you do put in that time. It definitely will pay off in the next bull run. But keep this in the back of your mind and say, if I'm not going to buy the whole company, I'm not going to buy a single coin. So thanks, guys, for tuning into this week's market review. I know it might have been a little bit shaky, a little bit all over the place, but I'll be better next week, and working on my market analysis. So have a great week. please like and subscribe if you enjoyed it. And, we just retail investors trying to figure out what's actually cracking in this game. So have a wonderful day. Have a good week and trade well.